Hello ladies and gentlemen, and thank you for watching our educational videos section. So I'm going to be talking to you today about technicals versus fundamentals. And so these are two different types of strategies that an investor may use when making a trading decision. So we look at the first example, which is technical trading. So there are different types of patterns and indicators that investors use, which I'm going to be talking about when making a decision. So I'm going to use the case study of Boohoo. So you can see Boohoo's stock price charted in front of us. So you can see that there are these flag patterns occurring. So we get this pole, which is upwards trending, and then we get a little pullback, which creates the flag. So the highs and lows create this pattern of the flag, and then this signals that there is another rise to come towards the end of the flag. So it's a good idea for investors, technical investors, getting in at the end of the flag for another bullish pole, which is exactly what we observed with Boohoo. We got another rally, and then another flag, and then a little pullback, and then investors looking to buy again and getting another pole to set the next trend. Another key thing is support and resistance levels. So this is based on the Fibonacci sequence. So it's the idea that prices will always have support and resistance at certain levels. So it's kind of retracing previous prices. So you can see that Boohoo was initially operating between this band here. So it's between the 255 support level and the 288 resistance level. And then we got this breakout. So what we get is a breakout because Boohoo's share price has jumped above the 288, and some investors jump in, technical investors jump in and see a breakout, which is usually a bullish period. And we did see this, and it rose to 316 points. However, another thing to notice was this fallback, and this pullback was due to the stakeholders selling off. So that those at the top, the CEOs, etc., selling off, and this is a red flag for investors, because if stakeholders are getting out, then that means that there's something to come that will cause a pullback in the stock. So investors flooded out, and we got this drawback. But yeah, so it's key to remember these different support and resistance levels as a technical trader. Another thing to note is the 50-day moving average, which is above the 100-day moving average, which typically signifies an uptrending stock. So on the other side, we have fundamental investing. And fundamental investing is using financials, PE ratios, and things like that to influence your investing. So we're going to look at at how these affect value investing. So what an equities trader may do is look at the discounted future cash flows, so discounted forecasted cash flows of a company over the next 10 years, and create a net present value for the stock. So this is one way of value investing, and this is based on like the Warren Buffett kind of ideology, buying low and seeing the value rise because you expect the stock to take off. Another thing to use is the PE ratio, and if the PE ratio falls below, say, a 5-year or 10-year PE ratio value, then that could signal to fundamental investors to buy and watch the price increase. So I hope this gives you an idea of the different positives and negatives, and like how to actually invest technically and fundamentally. And it is always good to keep this in mind and maybe try and incorporate both, which is the style that I sometimes use when influencing your trading investments. Thank you.